Morning, traders. It's 8 a.m. Chicago time on Wednesday, the 12th of January, 2022. Thanks for joining me on episode number 2150. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, coming in, the key piece is we do have a mild risk on sentiment this morning, with the Nasdaq leading higher. The key piece that was anticipated this morning that is in place is the U.S. inflation number, which was in line. Core inflation came in at 5.5% versus 5.4% expected, so slightly higher. Month-on-month inflation came in at 0.4 versus 0.5 versus 0.4 expected, and core inflation month-on-month came in at 0.6 versus 0.5. So in line to slightly worse, but the market really took off. Really saw a decent trade today at 18 quarter long, but the way it whipsawed back after filling 24.50 or so just didn't hold on. And here we've pushed 47, 30, 50 on the high in the S&P. So clearly a risk on sentiment. And I talked 2 days ago about the neutral extreme high close on Monday that is quite bullish, and the expectation is a swing long or swing buying, and that's exactly what we're seeing here. So that's where we are. We're seeing it strong across the board. Copper picking up. Crude has taken out its prime bar from last Thursday and has taken out the 80 again. Crude appears to be heading towards the most recent high. Its most recent high, which was 84 something in this contract before we roll. Crude is pushing prices higher, and therefore energy costs are increasing currently. Looking at the S&P has traded quite a bit again. Volumes have been pretty strong this week. 239,000 contracts traded so far. The expectation is around 110. And the inventory 70% long. 70% of the volume traded in the overnight session took place above settles. So we call it the inventory is long. The range 35.5 points is much higher than the one standard deviation expectation of 33.75 or 34, and much higher than the mode, or the most common range overnight, of 23.5. So again, relatively bullish. Yet again, crude was initiative buying, and now the S&P is initiative buying, responsive into 47.80. The next key number, we do have some resistance here, anticipated resistance around the 47.32, 33 area. I have a stock zone at 47.30 in the S&P. And then from there, really the point of control is 47.80. The all-time high is 48.08 quarter, I think. And so it's we're kind of running higher, with the Nasdaq anticipated to be the weakest of the bunch. So that's where we stand. Looking at yesterday real quick. Yesterday we had scenario 1 and scenario 2 play out. Wow, that's an awful color to mark things with. So yesterday we had scenario 1 plus scenario 2. Scenario 1 was expecting a push down, just as we got, and then sideways for the session. Scenario 2 was anticipating a push down and then a squeeze higher to take us back to towards 47.07, and we got to 47.0650, 47.0650 on the high. Yesterday we closed in what was a double distribution trend day. We closed at the extreme, very bullish close again. So the expectation overnight is to push that high, and we did. The overnight high was at 47.1875 this morning, and currently it's at 47.30 and a quarter. You could see the delta really followed price, very orderly trade, and finished at the high with price. So this is fairly straightforward. Here's what's happened since the reopen. We opened right at the settlement. We pushed the high as expected, consolidated in the overnight session, pulled back to 46.95, which was not expected, and then now finally pushing into having pushed into 47.30. Remember, the 32.33 up here is expected to be. We're expecting to see some resistance from below, pretty minor resistance, and so that's where we stand. So it's looking like it'll be. Well, we're definitely opening in an open auction or in an out of range auction. So we're opening in a gap, and just like the standard gap day, we're looking for gap rules. And the gap rules say that we would expect a response, or for those who are long in the direction of the gap, once they come in, they're likely to take some profits off the table in equities. Remember, the underlying product here is stocks. So the expectation is to come in, take something off the table. So we're looking for a response. If we don't get that response, then we're bullish. And we're looking for the market to push the next levels, 47.50, 47.80. It could get 47.80 today, no problem, well within the recent ranges. But just remember, we're opening in a gap in the thin portion, of last Wednesday's sell-off. So we're really filling in a lot of here. Let's squish this a little bit so we can see. So you can see we fell off on this on the 5th. On Wednesday, we were in balance, made a new all-time high at 48.08 quarter. I guess I was right. 48.08 and a quarter. We opened in a consolidation in the lower distribution of Tuesday, and then we sold off on Wednesday. Now that we've cleared the 47.15 here, we are really climbing up the flagpole, this portion here, these thin singles in this range, and we're looking for it to push through the 47.50. There is a minor low here at 47.47 that I have marked on the master levels right here, swing low from the 3rd of the Monday, the first trading day of the year. We might get a reaction here, not sure, but beyond there, I'm looking for it to push right into the 47.65 and then get to 47.80. 47.80 again is the most traded price so far this year. So far, if you just take out everything but what we've traded so far, 47.80 is the most accepted price, is the key price of the year. So that's where we stand there. Looking on Monday, I talked about the overall picture and that it is very likely that the ES would snap back to at least its monthly VWAP, which at the time was at 47.07, has dropped yesterday to 47.04, and here we are. We see that across the board here. Russell remains a little bit weak. The VWAP for the Russell is at 22.07, and the high today for the Russell is around 47.04, something like that. So this is actually happening from what was discussed on Monday. If we can get a reversal, which we did, we got a V bottom, then the next area we're likely to tangle with is the monthly VWAP, and then we go through our price map to see what's next. Let's take a look really quickly back to the review. Let's take a look at what it has done. And you could see that we moved below the MC point of control in this area since October 25th, down at 46.83 quarter. We tangled with it yesterday and we finally broke through. And so what we have is a market that is initiative away from the most traded price. So the momentum is likely to continue. The expectation is likely to continue higher, again targeting 47.50 and 47.50, 47.65, and then ultimately up here back to balance, back to the most traded price of 47.80. So faders beware. I don't have that same sentiment about the Nasdaq. The Nasdaq has is more weighted towards the big ticket stocks, and those are overdone, seem overdone still, and seem to be struggling to maintain higher prices. The Nasdaq wants to sell more easily than it wants to climb. Currently, it is climbing fairly easy. The auction fairly easily. The auction is facilitating trade to the buy side relatively efficiently, but I'm not expecting that to extend very far. So let's take a look at what's expected for today and have you guys on your way to finishing up your homework and preparing for the action. Okay, so what's expected for today? By the way, if you're a Sierra chart user, I suggest you sit in on a webinar today at 4:30 Eastern. Go to, on Twitter, go to twitter.com/realedgeclear, and you will find the invitation to that. I've retweeted it. It should be on my feed as well. But we're hosting the founder of Sierra Chart, the creator of Sierra Chart, and we're talking about the services they're currently providing. EdgeClear is a launch partner for their Teton auto routing feed. This is for Sierra users. There's also a free giveaway. EdgeClear is giving away 3 Sierra Chart subscriptions, and it's giving away hats and fleeces and stuff like that. So make sure you register to win. So open auction. We're looking for an open auction out of range, looking for it to be responsive. I know this chart is very small, but there's a lot of range to cover. Looking for an open auction to respond back into the 18 area, not expecting it to get to 11, the overnight point of control, and then for it to turn over, push to 47 right here, 47, and then 65, with the ultimate target being this 80 right here, this 80. So I'm looking for it to battle the 47, pull back, consolidate, and then squeeze and potentially fill in the single prints at the 61. That'll give us about 50 points of range, something like that, 45, 50 points. Remember, ranges collapse on rallies and expand on sell-offs just by the simple mechanism of the market being buy and hold mainly, and also the way stops work. So the second is a consolidation on the open, squeezes immediately higher, can push as far as this 47, that I'm looking for an impulse down. So the impulse has to show up, an impulse down. Then I'll start looking for a pushback into the 47.11. And then we could really see it dropping and reversing back into 83, 85, 83 before the bounce. And what this is it's a higher high, higher low that is repairing some of yesterday's auction and is creating a better foundation for a rotation to 80. So this is a healthy scenario too, is a healthy thing for the market to do, to be responsive, trade back through to establish a better foundation for a continued rally higher. That's all I have for you. Good luck, and I will catch you tomorrow morning. Take care.